Welcome to another stage analysis video. It's Sunday the 17th of March 2024. Got a lot to get through this weekend as always, but you don't have to watch it all in a single viewing. You can break it up into multiple segments. You can use the chapters feature, which is at the bottom down here in the Vimeo bar. So just drop down there and click the drop down menu and skip to whatever chapter is relevant to you. But we're going to start off today with a look at the significant bars, starting with gap here, GPS. So making a new stage 2 continuation breakout attempt this week on earnings results. So you can see its move over the last year. It's up around 200 or so percent. So since its spring low there, so 230 plus percent since it made a spring attempt back down here in May 2023. Stage 2 breakout point happened at the end of October here, so started to break out in mid-October. You can see the relative strength versus the market at that point. During that time the market was drifting lower, so gap was showing significant relative strength, which you can see in the RS line down here. Started to break back above its Mansfield relative strength 0 line in the earlier part of October, and then when it broke out was starting to expand above to new highs there. So now moved 100 or so percent since the stage 2 breakout level as well at this point. So doing really well in its stage 2 advance, but still around 40% to the old 2021 highs. Wanted to look at this chart particularly as I think it's a really good example of stage analysis over the years, and a really good example of what for a beginner mistake that I often see in the stage analysis method. As lots of people will look when they're new to the method, they'll see a big stage 4 decline like this, and they'll immediately start to jump in at the first sign of a stage 2 breakout attempt, even though it's still under significant resistance at this point. There may not be any massive sideways ranges to look at through here, but when you have a huge stage 4 decline like this and only a small base structure, then this is still under resistance, time-based resistance. So there is an easy technique that you can use to look for that kind of resistance, which is just drop a Ichimoku cloud onto your chart. So not the full cloud with all the other features, just the cloud itself, and that shows you a good visual example of where potential resistance may be based on the time-based resistance. As the deeper and longer the stage 4 decline goes on for, the more of that overhead resistance you're going to have to deal with, and it's one of the 4 major components of the stage analysis method of we don't buy breakouts when it's still got significant resistance to deal with. So at this point here, although it had a good 20 or 30% move, we had an initial stage 2 breakout, rallied up, started to roll over. There's also some signs here on the pullback, so we'll just flip this back to the normal chart. So you've got your stage 2 breakout, rallied up, but you can see the initial pullback was quite strong as well, so that's another sign. You can see these bars actually quite big as it pulled back, so it came back into the backup range. So initial breakout, you've got the backup starting to turn back round again, and then made this double top and started to roll over. So at this point here, as it started to break back down again, you would have potentially got out, still for a small profit, but you would have been out or back at break even if you didn't make it back out at that point. But that's what we call a failed stage 2 breakout attempt. So it finally made a new attempt back in October when the market was just getting close to bottoming, so it was ahead of the market, as I said, and it's had a really strong move since. But as we saw with the overhead resistance, it's now in what we call clearer waters here, blue skies ahead type thing. It's not got any overhead resistance left at this point. This is older, technically based resistance, which still can have an effect, but it has much less significant effect than this kind of near-term resistance. So we try not to buy stage 2 breakouts when they're in this kind of area after a significant stage 4 decline. If a stock has had a stage 4 decline at this, you don't really want to see it drop all the way back down to where the original stage 2 breakout was. If you have a stage 2 uptrend, it starts to roll over in stage 3, you want to see it pull back only around half of that stage 2 move and start to flatten out and then start to move back higher again. This is the kind of pattern that lots of the semiconductors made during that time. Started to break back out again in January 2023. They were making this kind of pattern, but the ones that dipped all the way back down to their stage 2 levels and even below, we had lots of stocks doing that, have taken a lot longer to actually start to move back up again. So, and some obviously haven't made much progress, but the ones that have a much smaller pullback here tend to move out. So this is a really good example of a beginner mistake that people make with the stage analysis method, as not every stage 2 breakout is going to lead to it making a huge advance. Many of them fail. You have lots of small up thrusts and sometimes bigger moves like this where it'll make a small move out, even come through into the backup and start to push out again, but then ultimately fail. So while the market was moving higher during this point, this was rolling back over again, back into its base, back into the broader stage 1 base, but into a small stage 4 decline before moving back out again and turning back to stage 1 again. So just thought that was a good example. ORCL, another one with a significant bar this week, making a new stage 2 breakout attempt. I think it was on earnings. You can see some bigger volume. We also got quadruple witching this week, which has distorted the volumes. So taking those all with a pinch of salt. You can see the double top here where it started to turn towards stage 3. We had a significant bar through here and then started to roll over, touch that 30-week moving average. So started to develop in stage 3, but we've now got a break above the recent pivot highs through here, although not clear of this overhead resistance yet. So technically attempting to make a stage 2 continuation, but without it being clear of the highs here, it could still turn back into 3 again. So breaking back above the Mansfield relative strength 0 line at the same time. I think the SATA score is up to an 8 on this at the moment. So in a potentially good position here. If it can start to consolidate through here, then we'll be looking for a further continuation breakout to new highs. SCCO, another one. So we've had copper moving into stage 2 this week. I'm going to cover that at the end of the video. So copper stocks have done really well this week, almost a 20% move in SCCO here. You can see the relative strength line also breaking out to new highs at the same time. So just multiple pivot breaks after tightening up for a while, but purely driven by the copper move into stage 2 at the moment. So a little bit extended in the short term here now, so be looking for this to tighten up once more. VMEO, I talked about this a couple of weeks ago on the video. So you can see the significant bar as it broke out into stage 2 a few weeks back. So starting to make some progress here. Again, volume high, but again, pinch of salt with the quadruple witching this week. But you can see the broader structure, it's now starting to also push above. So the first close above the broader structure, but 3 weeks into its stage 2 advance here. If we look down onto a daily chart here, so you can see the stage 2 breakout through here, pullback into the backup, and now starting to move back to the top of the range here. So it may need to consolidate for a while here. It's had a sharp move up. Could need to potter around in the 4 to 5 range here, but looking for it to tighten up and ultimately continue in stage 2.